For the past decade, the story in the markets has been really, really simple. Software was eating the world, right? All the profit was digital, it was scalable, it lived up in the cloud. Well, I'm here to tell you that era is over. Today, we're going to talk about why the next great bull market isn't going to be built on lines of code. Nope, it's going to be built on concrete, on silicon, and on light. See, the problem isn't software anymore. The problem is physics. Right now, I know a lot of investors they're paralyzed, they're scared. But check out this wild statistic from the last 30 years. 78% of the stock market's best days, the really big up days, happen during a bear market or in just the first 2 months of a recovery. You heard that right. The moments of maximum opportunity, the times you absolutely have to be invested, happen when you feel the most anxious. It's the ultimate paradox, isn't it? The best time to be in the market is the exact moment your gut is screaming at you to get out. And the price you pay for caving to that fear? It's staggering. I mean, if you had missed just the 10 best days, just 10, over the past 3 decades, your total returns would have been cut in half. Seriously, think about that. 10 single days could be the difference between retiring comfortably and just scraping by. So, what's the story you always hear on the news when things get a little choppy? Flee to safety, run for cash. But you have to understand, that is a trap. It's what makes you miss those super important recovery days we just talked about. It's a move that's driven by fear, not by logic. And that brings us to the big question, right? If running to cash is a huge mistake, then where is the smart money actually quietly moving? Well, I'll tell you, it's not where most people think. They're not just piling into more software. They're buying the physical world. And by the end of this, you're going to understand their exact blueprint. Okay, let's get right into it. Section 1, the Great Deception. See, that old story, the one about software eating the world, it's now a really dangerous distraction. The whole game is shifting from a story about code to a story about physics. You know, as the Nobel laureate Robert Shiller said, stories are what move markets. And right now, that viral story is changing. It's not growth at any cost anymore. The new story, the one the smart money is betting billions on, is the infrastructure supercycle. And this is the perfect illustration of why. The whole AI revolution, it has slammed into a physical wall. Think about it. You can scale software infinitely with a simple copy-paste. But you can't copy-paste a semiconductor factory, you can't copy-paste a fiber optic network, and you sure as heck can't copy-paste a power plant. The digital world is now totally 100% constrained by the physical world. So let's look at that first major physical constraint, the silicon bottleneck. This is all about the nitty-gritty of actually manufacturing the chips that make AI possible. And right at the heart of this bottleneck is an acronym you have got to know, CoWoS. It stands for chip-on-wafer-on-substrate. And look, it's a super complex piece of tech, but all you need to know is that it's the secret sauce that stitches memory and processors together. It is absolutely vital for AI, it's proprietary, and there is nowhere near enough of it to go around. It is a massive choke point. Now, this is where a company like AMD has this huge, sneaky advantage. Instead of trying to build one single, giant, expensive chip that's really prone to defects, that's called a monolithic die, AMD uses what they call a chiplet approach. They basically stitch together smaller, high-quality chips. This makes things way cheaper and much more likely to work, giving them a real edge as AI customers start to care more about costs. But here's the thing. Whether that chip comes from AMD or NVIDIA or Apple, they all have one thing in common. They're pretty much all made by one company, Taiwan Semiconductor, or TSMC. I mean, look at this. With over 90% of the market for advanced chips, TSMC is the gatekeeper. They're the ultimate toll road of the AI revolution. And yes, they control that CoWoS bottleneck we were just talking about. Okay, so let's say you've managed to get your hands on a chip. Great. But that just leads you to the next 2 giant problems. You need the power to run it, and you need the light to connect it. Welcome to the energy and light bottleneck. You have to stop thinking of an AI data center as just a bunch of servers. It's not. It's a single, massive supercomputer. And if its internal nervous system, the network, is too slow, those multi-million-dollar GPUs just sit there doing nothing, waiting for data. This is the optical interconnect bottleneck. And a company called Ciena, well, they're the master plumbers fixing it. So Ciena's secret weapon is something called coherent optics. The easiest way I think about it is like this.
They figured out how to basically bend the rules of physics to manipulate light waves and cram an insane amount of data down one tiny little strand of fiber. As data centers get bigger, old copper wires just can't keep up. Everything has to be connected by light, and Ciena are the best in the world at it. But, maybe the single biggest hurdle for AI is just raw power. The US electrical grid just wasn't built for this. It can't keep up. So what's the solution? Data centers are now building their own power plants, and they're doing it with industrial gas engines from companies like Power Solutions International, ticker PSIX. And just look at this chart. Their projected growth absolutely dwarfs an industrial giant like Caterpillar. But the market, it hasn't quite woken up to this yet.
Okay, let's move on to the final bottleneck. And this one is my favorite because it's completely invisible. It's the digital real estate monopoly. In the wireless world, you have to think of spectrum as land. It is a finite physical resource. And the most valuable piece of that land, the beachfront property, is called mid-band spectrum. It's the Goldilocks frequency. It's got that perfect mix of high data capacity and really long range. It is the absolute perfect foundation for 5G. Now, here's where it gets really interesting. Look at how this spectrum is divided up. Deutsche Telekom, through their US company T-Mobile, owns the deepest, most valuable portfolio of this crucial mid-band spectrum. This gives them a built-in structural advantage in both cost and performance that their competitors literally can't replicate without spending billions and billions more on physical cell towers. So we've looked at silicon, we've looked at energy, light, and spectrum. Now it's time to put it all together. This brings us to the payoff. This is the secret blueprint. This is the system that shows you where the smart money is really going. So here it is. This is the key takeaway. You have to see this as one interconnected system of physical things. It starts with a company like AMD designing the AI brain. That brain gets its physical body built in a TSMC factory. Then Ciena provides the light-speed nervous system to connect thousands of those brains together. PSIX provides the metabolism, the raw energy to make the whole thing run. And finally, Deutsche Telekom provides the voice, delivering all that AI's output over its exclusive wireless real estate.
So the entire idea here boils down to one simple thought. Stop chasing the 100th new AI software app. Buy the bottlenecks. Own the companies that provide the power, the pipes, the factories, and the physical land. Because here's the thing. If AI goes to the moon, they win. And if AI growth slows down, but we all keep using more data, guess what? They still win.
So there you have it. We've just mapped out the physical blueprint for the entire AI revolution. The key is to start looking for these physical constraints, these bottlenecks. And that really forces us to ask a bigger question. Now that you have this new way of seeing the world, what other invisible monopolies are hiding right there in plain sight?